Here, JB here. Hope everyone's doing outstanding. Tuesday, December 23rd, 9:20. On this fine morning. Very quick rant here. No one only have 10 minutes to the open. And two, I don't have my charts up here, so I do apologize for that. But talk quick about the market. Some names I'm looking at go from there. S&P futures have crept into the red here, down about 0.2% after the third quarter GDP number, which was supposed to come out in October. Fast forward 2 months later, came out this morning, and it was a monster number, right? 4.3% growth on a 3.3% or 3.2% estimates wherever you look. Some have it at 3.2, someone have it at 3.3, but that's not the issue. The issue is this huge beat now has folks paring back the odds that the Fed cuts rate at the next Fed meeting in January. Here we go again, right? It feels like I forget what data piece it was 3 or 4 months ago. We had a similar situation where some came in better than expectations, and all of a sudden the probability of a rate cut went from like 90% down to 50%. And then we know how that all went, right? As the weeks progressed, the probabilities went up. All of a sudden it was 90% into the Fed meeting, and then the Fed cut rates. So read into it however you may. To me, it's going to be somewhat of a quiet week, right? The news related events, the data, it's kind of, we don't have too much. There's no earnings. I think there's one company reports earnings this week, so it's more going to be like chop and positioning into the start of 2026. So I don't want to have any surprises, and not only that, you don't want a situation where the bears take advantage of a low volume, low liquidity kind of market where maybe things get a little nutty. I was going to post it earlier. The VIX earlier this morning hit 2025 lows, under 14 or right at 14. That's the lows for the entire year. Who would have thunk it? Everybody calling for the recessions back in April, just the crazy stuff, right? So hopefully there's a quiet, choppy consolidation today as well. Right? We don't have some crazy swings. I mean, I would love to see swings, right? Volatility is good for options if you're on the right side of the trade. Me, obviously, I'm in the call, so I'd want for upside. But yesterday, take a look. Yesterday, gapped higher at the open, chopped around 10:30, 11, and then just a tight trading range, 0.2% for the entire day. So I was expecting more of a carbon copy today. We'll see if markets find some footing here. 684, we got underneath just a little while after the GDP data. We're at 683.55. Hopefully just bounce around here. 686 looks like strong resistance if we get up there today. And then on the flip side, 679. That's kind of a line in the sand. We get under that, I'll be looking for some hedge puts. All right, so that's overall market. Just quick individual names. SanDisk opened at 250, yes, or 248, all the way up to 252 right after the open. I was trying to get out some more of my strikes. I had them up at $3, then down to 250. Finally got filled at like 210 or what have you. So closed some more out for 100% just to get more profits. And then I held the last few. I was actually looking for more strikes as it was dipping. I was looking into next week, maybe the 290s, the 300s, and it just kept falling. Next thing you know, it's under 230, tested 227. And then it started to bounce. And you start looking for news and catalysts for the move, and there was no downgrades. It was Seagate and Western Digital were down 5% yesterday. So you look at the headlines, it's they're selling off because of the huge monster runs they've had in 2025. Makes sense. But then on the flip side, you look at Micron was in the green. So I wasn't confident enough to add calls for a bounce, but SanDisk did reverse from red to green into the afternoon, closed up 1%. I still think the path is more biased to the upside, 280 plus in the coming weeks. So I'll continue to look for opportunities to trade that one for upside. Still have the last few of my calls and continue to hold those. And then a quiet day, right? So I got some more Kodak strikes yesterday, some strength. I was looking, kind of rationalizing, should I add more position? I already have the January 1250s, already played the Decembers for nice profits. You look at the chart, and of course I don't have my charts here, but the higher highs, higher lows, it dipped all the way to the lows last week under $8 and then started to bounce. And the last bounce, it went from the 7s up to 10. This one, maybe it's 8 to 11. And, it gets over double digits. I think it's going to be 11, 12, 13 quick. So that's the premise. So I got some more of those Kodak strikes like I do on trades. I'll lock some in on the way up. Serve Robotics, nice day yesterday, up 7%. No news, no catalyst. I was almost pulled the trigger on some later strikes, but want to see that 11 hold. Maybe today's the day. I'll look for more strikes here at Serve. And then later in the day, I got some SolarEdge calls. You have that Google news yesterday acquiring Intersect, which is pretty much a energy infrastructure company, more on the lines of clean energy, right? The solar, the wind, the battery. So because of that, you have to think some of the names in the space would have a bigger bid than they did yesterday. And SolarEdge, of course, is the name of choice for me. First Solar was up yesterday. Maybe this is the kick that SolarEdge finally needs to break out of its rut it's had since its post-earnings ramp all the way up to near 50 bucks. Once it does get going, I think it's off to the races. So I don't want to be caught in the dust. So if it does have strength again today, I'll look for more strikes. The thing is, I don't know why I didn't get January strikes last week, but now I have time on the calls, which you've seen Solar Edge, it's volatile name. So even to try and time the tops and the bottoms is difficult, right? I'm not going to sit there and try and time it, but I will look for opportunities to try and trade for upside. So even if there's weakness today, I might look for some more strikes there. And that's it. We got 4 minutes to the open. I'm trying. Oh, Oracle. I was mentioning Oracle yesterday, up 3% yesterday, and the weekly strikes are in the red. So if you added calls Friday, you had the trade right. You had a 3% gain on the stock, which is a large move for an option. If you were in a stock and the stock goes up 3%, you would think the weekly strikes would be up 50, 100%. That wasn't the case at all. So still looking for Oracle and Broadcom. Oracle for a move into the 200s. Broadcom for maybe 355. And just surprising to see it yesterday reverse the gains. It was in the red. So I don't know if that's a sign it's chopping and it's gonna set up for new lows. Is Broadcom set up for 300 for the end of the year? Hopefully not, but that's that. And then last but not least, you had Laura Martin from Needham, one of my favorite analysts. She came out with a reiteration of a buy rating on Reddit and moved Reddit to their conviction buy list. I don't know if that has the same weight as the Goldman Spectacular conviction buy list, but maybe this is the kick it finally needs. So, I was watching yesterday all the way up into the 240s, then fizzled, went from green to red. It's in here at 231. One of these days starts to move into the 250, 260s. Looked like it was going to do it last week too. That's that. I think that's it. Let's have a great day. I'll be back on audio later. Rock and roll.